let's take a look at our pre-market here. First and foremost, I want to go back into what was the trade of the month or trade of the week trade a while back, the good old GBP USD. So again, gang, let's take a look at higher time frames. We're going to look at a DSR level that came in right here from July of 06. This is the GBP USD, British Pound Dollar spread. Previous structure support, once broken, anticipated resistance. There was the swing high put in July of 08. Swing high comes in at 170.22. Left click here, drop it in here. That represents the high. As the market rallied back in over here, we talked about short entries at the 168, winner. Short entries here. And then all the way up to the 170 handle, respecting and retesting the swing high right here. Now again, this is the classic, identify a key price point on a higher time frame and then look for qualified trading signals at or near that level. So it did move against the position, and that's where we use the adverse excursion. Okay, so right here was the swing high. The thing that we had to do was respect the spike high here from July of 08. So they did go test that. We have a monthly bar here. It could be a monthly lower close on this particular time frame. Now let's take it down to the weekly. Okay, weekly we had a massive DSR level. You can see that we're overbought, higher low, bearish divergence on the retest. So there's our classic SOS4 sell signal on the right side. As it moved against us again, protective stops had to be above that swing high at 170.60. Let's take it down further. Let's go to the daily bar. And on a daily basis, we initially traded the double top that came in right here. That was our first sell signal there in February. Again, nice little winner. Back in right here, added to the position, and then there's the example of the adverse excursion. Now on a daily bar basis, you can see the most recent swing low, 67.28. Daily bar trade below, close below. We should see a retest of that 165 handle down here. All right, and then finally, here is the hourly with the DSR level set to 240 minutes. Okay, so it's a 1 hour chart with a 4 hour DSR resistance all the way up here against the 169.20s. First test, no trade. Sell the retest. Now you see that we've broken structure support. So here is a long entry at the DSR level. Here's the turning point black tip sell. And again, gang, stay in the habit of dropping in your horizontal lines for support and resistance. Now we've broken below, closed below. We go new structure low, lower high. Where does this lower high exist? Look left. Previous structure support, DSR support, once broken. Anticipated resistance right there, the 168.50 handle. And then, boom, a rollover. So here we are at 67.30. This is not only a big DSR level and significant swing low on the hourly, but as you saw earlier, it's significant on the daily as well. So break below, close below on the daily. We should see a move down into nice new structure lows. And again, the big pattern on that was a retest of the 151. So as I pull this back in on the weeklies, you can see that this symmetrical double bottom actually down at the 149 handle. Now again, as it rolls over right here, if we pull back down into this level right here, see all this structure resistance? That was the last level of resistance prior to this last drive. So from the 168, 68.50s, 162 produces 500 to 600 pips. So nice, big, massive directional trade. Now, real quickly, crude oil. I've got crude oil set. I'm on the continuous contract data, top left. Okay, and again, you see that we've got a massive daily DSR level here at the 104 handle. So we're in a complete sideways trade. Third test right here at the 104s. DSR major in red, DSR minors in black, and basically a triple top. And again, this is stretched out. It's a continuous contract. Swing high here, 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 there's the triple top or W top. We had an impulse move that went right to a Fibonacci extension level right here. So I'm going to invert the last static swing. You can see we went right to the 1414 fib extension. After that, we pulled back, put in higher lows, retest, higher lows hold, retest. That's on the daily. Now we can pull our crude oil back in right here on the hourly, and I'll grab the most recent contract. We'll go 07s. So this is the July 2014 contract, and we'll take a look at this intraday. Big DSR levels up against that structure resistance, the 440s. And again, you can see structure support, 103.60s. So relatively tight range here, 440 to 360, about 80 cents. Any buy signals down against this 103.60 handle, those are long entries with trend. We had a qualified sell signal here intraday. I'm still short part of the position. And you can see that we're driving down into that 103.70 handle. So I'll trail my stop right here. I'll go 96, locking in one tick of profit. So the 103.73 is respecting this level right here. Absolute swing low 103.54s. Okay, so long entries today, 55s to 65s, a 10-cent window, and this would be decent swing trade for a rally back into the 440s. So that presents about 80 to 90 cents, $800 to $900 per contract of opportunity. If we break below, close below, then we're likely to see a move that is equidistant to the current width or height, if you will, of this channel. Okay, so we just take that, we identify the height of the channel, drop it in at those lows, and that would project down here to the 240s. Look left, I've got structure resistance right here at 240s. So that'd be a one-to-one measured move. All right, now let's pull this guy back down. I'll roll my profit target down even further. I'll look for 61s on the balance of that. All right, let's go take a look. S&P 500. Nice little rally underway. We were looking at potential sell signals against that 1900 handle. Market drove to the 1900s and through it. Seen swing highs at 1914.15. There we go. So break above, close above. Right here, symmetrical double top. Talked about turning points. There's the buy signal right there with trend. Retest right here, long entry, SOS 5 buy. 1860 to 63s. DSR level and structure support coming in from the left side right there. Again, there's our cluster 3 right there. Actually, it's a cluster 2. We go turning point followed immediately by black tip. Then we retest that area right there. Here's overbought, higher low, bearish divergence with a cluster 2 on the right side. Previous structure resistance, once broken, anticipated support right here. This long entry failed, stopped out as we make new lows. Buy them here, targets attained. Previous structure support right here, once broken, anticipated resistance. There's the cluster 2 sell right there. Extreme readings on RSI, right back down to the 65. So on a swing trading basis on the hourly, these are little 15 to 25 point moves. Now we've taken out our 1896s off to new structure highs. So let's go in and let's add Fibonacci. We'll look at some ratios here. What's the swing low that preceded the drive to this new structure high? 382 fib retracement, 1895, 96s. Look left, previous resistance, anticipated support. So now we've got an area of confluence right there on the hourlies. So walk through your if-then thought process. If price comes back 1895 to 1900s and I get a qualified buy signal, then I'm going to look for a drive to a 127 extension. So if we look at equidistance, we can take the value of, measure the leg right here, this impulse leg. If it pulls back to the 382 and holds, then math always comes in the same. This is a 1618 Fibonacci extension of the impulse leg. So we're going to measure the exact same leg. Where does this project? See the 1618 right there at 1950s, 1945s. Okay. All right, so there is the setup for the S&P 500. Now, let's take a quick look here at just some basic higher time frame. Frank asked about continuous contract, historical testing, and then Frank also on contracts that roll frequently. So, for example, here gold every 2 months, 6 times a year, crude oil every month. Yeah, so I just use the continuous contract to look at historical data. And you can read about how your data provider manages a continuous contract. Typically what they do is they simulate rollover periods and they try to smooth out that rollover data. Yeah, that's the daily bar. I've got my DSR majors applied on a weekly. So I've got these set to a 5-day. My DSR minors are set to a 2-day. And then my turning point black tip. Again, gang, if all you do is go back in and set that turning point black tip up, watch for 2-bar cluster trades, and here's a great example. This DSR level formed right here off the swing lows. So the DSR minor was there as the market pulls back down. You see that we've got extreme oversold right here, SOS1. I've got a turning point followed 2 bars later by a black tip. So this is a cluster 3 buy. At a DSR level, look left, structure support. So there's the long entry. If I buy next bar market, then there's my black tip, the open of the next bar. A retest of this DSR level would be expected target. That's a $7,000 move in crude oil, $7 or 708 ticks. Yeah, then as the market rolls higher, again, DSR major, DSR minor, sell the retest with a qualified signal, buy the retest with a qualified signal. Turning point, 2, 3 bars later is the black tip right here. So there's a cluster 3 buy. Now this one for me would be more aggressive. Note right here, I'm not quite extreme oversold. This is my 51 RSI. All right, so let's go take a look here real quickly. Yeah, if I'm on a daily bar, now if I have less data, so for example, if I go in and I look at an hourly time frame, I've got enough historical bars right now in both crude oil and gold that I can take a look at that. But you can see if I use the August 2014 contract in gold, it was very thinly traded, 2, 3, 4 months ago. So on a daily bar, it's best to use continuous contracts in the futures markets. All right, so let's take a look at S&P through those highs. Yeah, quick run around on the Euro. Euro took out the DSR minor, headed back down here. So Euro traders, let's keep our eyes peeled right here around the 135 handle. Here was oversold bullish divergence for a long entry, turning point black tip, the same W top or triple top that we just saw in crude oil showing itself there. So again, regardless of the market, regardless of the time frame, a pattern is a pattern is a pattern. Take a look at the GBP USD on the daily. Nice pullback, that 167 handle significant. And then again, target 1 for the longer play on the swings, down around 64.5 to 165. And then extended targets back into the 151 handle. Okay, Japanese yen hanging out at the 101s. So again, note the significance of this 101 level. Every single test at the DSR level. Yeah, pretty sideways right here. U.S. Canada right there. Beautiful low risk long entries right here. Last test, there's the turning point black tip, 109.50 to 110.50, only 100 points. And you can see here, gang, look at the range contraction. I'll pull this up. And let's take a look. Right here, volatility was at 85 pips a day. This is in February. Again, look at the decline in volatility right here across the board. Down to 46, pop back up to 60 pips a day, and now we're testing our recent, basically 12-month lows in volatility. 42 pips a day, U.S.-Canada cross. Spiders, new structure highs. Qs retesting a swing high DSR level. Yeah, so we might look at some puts this morning intraday. Futures back into significant swing highs. $1.63 a day, back down to $1 a day right now on our volatility. So options desk, we'll take a look at these intraday. So on the mini Russell, I take the 7-day average true range, which is the bottom of the chart. And again, you can do this on multiple markets. We did some analysis and we looked at volatility. So we took the ATR of the last 7 days, again, just a 7-period ATR, and we multiply that times 120%. All right, so the current average true range here is 17.3 points. So we're going to pull up the calculator. So we take our 17.3 point average true range times 1.2. That puts us at 20.76. Okay? So we take the high of the day right here, subtract 120% of the average true range, and that projects our lows with about 80% accuracy. Now again, it doesn't mean that it will be the low of the day. That average true range projection, I call it the rule of projection, just says that 80% of the time, 120% of the 7-day ATR contains price action the next day. Yeah, so my rule of projection indicator takes the high, subtracts the average true range plus another 20%, and then projects the low. Some days it'll be dead on. Yeah, I use it for exits on short entries and so on. Okay, so we take the current high of day, so that's HOD, minus that value. We take the current LOD, or low of day, plus that value, and this projects the high and low of the day. Obviously, today, we're more interested in the projected lows. So the market has come off of its highs at 45.20. Okay, so minus 20 points would be 25.20, and then another 1 to 2 points. Okay, so down here is the projected low, and that's how we can kind of look at that Russell and say, hey, we've got plenty of room to run if we do take out these lows. Yeah, so NASDAQ over here on the top right, out on stops. Tighten this guy down, left-click close. Make sure no working orders. So we did a 2-lot on the aggressive, nice little winner. We did a single contract add-on using the color rotation. From the 7/16s, moved against us 3 points with a 5-point stop. Okay, took that one a little sooner, took the other one off at 4.5 points, let the balance run out at 10.25 on a stop. Mini Russell, still short. Fib dots right here, +2, would have come in at 31.60. So we'll just pull that down and take it off on the next tick. That would have been out on stops. Now here on the Russell, we could produce this double bottom right here at our DSR support level, and thus a possible buy signal. Okay, that's a counter trend long entry. Crude oil continues to roll sideways. Dow Jones, again, 600s to 625. So everything pretty range bound. I'll turn it over to George now. He'll get into some of the balance beam, take a look at higher time frames, and then get back into the day trading. Go ahead, brother.